Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. Thank you for being with us. This segment's brought to you by Proxy.com. That's Proxi. Check them out. It's a free listing service to find properties or put them on the system to sell or lease. Well, today we're talking about senior housing. My guests are Fergal, Brady, and Tim Gary. They're with Village Park Senior Living, and Ernie Anya with Bull Realty Senior Housing Group. And gentlemen, one of the things I wanted to ask you about is kind of the performance of the market, occupancy trends. How are things going?
So if you look at from an occupancy perspective, the looks are deceiving because it all depends on where you are in the market. But what we've seen also is that, for instance, in Metro Atlanta, 80% of all the properties are between 15 and 20 years old. Yet when you look at the occupancy and the rates for those properties, it kind of flattened out and declining a little bit. But if you look at the properties that are less than 2 years old, they're growing up in double digits. So it looks like there's a little bit of cannibalization. And even though it says 88% for the entire market, is not really so. It could be 94% for the right properties. And also, if you look at the different markets, you have primary markets, secondary markets, and tertiary markets. Those markets are not being addressed at all, and there's a lot of opportunity there too.
Yeah. Okay.
I think there's a lot of data in the market, from a national level. You look at that data, like you were saying, it's not necessarily what's on the ground. And to give you an example, we entered into a market that we had 13 different competitors, and we went and looked at all the different product around us. And we knew that from a new development point of view, we could create something, a new environment.
Now, I got to interrupt you. Did you take your mom with you? How do you go in there? You take that, Mom, we're going in.
There's different ways.
All right, trade secrets.
There's different ways. And by the way, I think we're very open to that, very transparent.
Yeah.
We want everybody to do well. Yeah. But I think in looking at that from an analytical point of view was how do we really judge each property from a class system or from a quality system? We looked at doing new development because we wanted to create a new environment that we didn't see in the marketplace, to have all the things we were talking about earlier about the amenities, the programs, and the quality of construction in place. Yeah. And we see the market being, it is driven today by the demand. The investors are in place. We're seeing the cap rates and the exit, high fives to low sixes, and it's maintained that for a while. Now I can't really talk about other different data points and other different performance of quality assets, but I think that's one thing that drove us to new development.
And that's a good point too, because if you look at some savvy developers, they're not competing against every type.
Where's some savvy developers?
Everywhere.
Right.
Right here. But the point is that the savvy ones are looking at not every unit that is in place, but what class are they? Class A, and then what are the rents? Yeah. One of the developers that I'm working with is actually looking at any competitor charging over $3,500. Mm-hmm. Anybody below that, they don't consider competition. Yeah. So that, to your point, you cannot look at a national average and make a decision on that.
Yeah. So there is a huge demand for Class A product out there right now. You have the private equity funds, you have the REITs, they're desperate for product. But the problem is they're wanting product that's going to last for 10, 20 years plus. And some of the older product, the problem with that is you can't reinvent the product. Yeah. It's single purpose built building stuff. And so we've gone to a different structure type, which is more expensive, but in 10 years, we can go in and reinvent that building. Maybe the restaurant styles change, maybe the amenities need to change for the newer baby boomers that are coming in. So, that's where the newer product is driving these cap rates down. And you're seeing a big spread between the cap rates of older product and newer product.
Yeah. And when you build new product, what is a range of time it takes to typically see stabilization?
Yeah, so, nationally it's 18 to 20 months. But, we're seeing, 12 to 14 months for that. And that's just because, again, we're newer product. We're doing something that the rest of the market doesn't have. We're penetrating the market with the customer sooner than most of our competitors. And so that's driving in more couples as well. Yeah. So if you have the appropriate product, then you can stabilize real quick.
And I think in some of those decisions, it's not necessarily a financial decision, it's an emotional decision. And we really kind of tap into that.
Yeah. And what do you guys see for difficulties in zoning today? When I look at facilities that are new, like you guys are building, they're beautiful. So not in my backyard, the NIMBYs, maybe say, well, that's pretty. Also, you're not taxing the schools. You don't need as much parking as a lot of uses, but still everyone fights zoning, right? So what are you guys seeing in the day-to-day?
So that's getting tougher and tougher.
Yeah.
I mean, it used to be, it was just, you walked in and you got it. But nowadays, that's still a battle. And it depends where you are and what the demand is. I mean, if you go into a market that's already got 13 products, you're going to get some pushback just because, how they may classify it within that community, whether it's multifamily or whether it's residential. And so then, but you go into a market that's in desperate demand, we're a great alternative because the guy right in front of us is trying to do 2 million square feet of, office and retail and hotels and everything else. So it makes a difference.
That point is also specific to the county. There's some counties that are very savvy, and the point that you made that, hey, there's no taxing on the schools or the parking on traffic, they take that into consideration, and they actually would prefer. On the other hand, it's really the residents of the area that may not be very well educated on what this is about that will come to the hearing and then make an objection. I just participated in one last week, and I brought in my market study, and when I was able to show, look, this is going to help you, and here's the statistics, we got a go vote because of that.
I think some of the municipalities we enter into, I think some of the city planners haven't really focused on senior living. They don't know what bucket we fit into, whether it's at multifamily, is it office, and most of the times we're getting a special use permit to be able to discuss what exactly we're going to go build. So I think a lot of land planners haven't figured that out, where exactly we fit into, and maybe for good reason, right? Because I think it comes up for discussion, and that way we're looked at and viewed a point exactly what that quality is.
Yeah, and there's different levels of service here, and there's different models. So, Ernie, if you'll talk to us a little bit about kind of the different levels of a continuing care type of development, and then I want to get back to some of the kind of different buy versus rental models that you guys see. So, yeah, you got kind of levels of care in some of these properties.
So the continued care model is basically uses the theory of aging in place. So you start with more of an active adult independent living that normally just provides housekeeping, meals, and activities. And then you move into assisted living and memory care that will have more activities of daily living, like bathing, taking care of feeding and things of that nature, or, like Alzheimer's and things of that nature as well. The old model for CCRC or community care included a skilled nursing facility. What we're seeing now is a trend that we call micro CCRC, where it's everything but the nursing home. In Georgia, it's harder to get the nursing home because of the census is lower, and there's been a moratorium on new certificate of needs to approve new facilities. But that product is very expensive from a labor perspective, liability, and so on. So the preferred model is really the micro CCRC. So you have the independent living, normally living a little bit separated from the other ones. You mentioned earlier cottages and things of that nature that could fit that model, and then move through the age phase of life.
Yeah. And Tim, speaking of cottages, there's people can buy or buy in, or whatever's kind of the different models you see.
Yeah, so in our model, it's all for rent in the cottages. And that's mainly because acuities change, and they want to shift to a different level of care, or there's a difference in the care model, the acuity between couples. But there are other models out there where you can do a fee entry model, and it has it's more like an insurance program where it takes care of you through the nursing home component of it. And then there's the fee simple model where you can you buy the condo or the home, and then there's they can resell your unit then again later, so you keep the population mix the same. We're big believers in this rental model just because it gives you more flexibility, and at the end of the day, it's less expensive.
Yeah, yeah. Well, what would you guys leave the audience with related to senior housing, some tips, strategies, some gotchas, or some reality about it?
Yeah, so the main thing I have to say about it is it's a management intensive operation.
Yeah.
And when you're getting into it, you got to make sure you have that expertise, or you find that expertise to do it. There are some great thinkers out there as far as putting together great developments and doing great development projects, and there's a big demand for it across the country. So
Yeah.
I would say that not all are created equal, so you have to go out there and really do your research and really kind of go
On the
in
locations
and understand where it is. But also going back to the emotional decision, when you enter into the community and that environment, what do you feel like? And are you preserving the dignity of your loved ones? Are you providing the best environment for them? And I know you have care and all those other services, but when you see I guess we're a micro CCRC because we do independent living, assisted living, and the memory care. But in that cross-pollination of different acuity levels and ages creates more vibrancy. And that's the feel I was kind of talking to. I know Tim talks a lot about the emotional impact of that, but I think that drives those decision makers of the feel of the community.
I agree with you on the emotional side of it, because when I was shopping for a location for my mom with her, the fact that where we chose, the people, everyone we dealt with, and the whole time she's been there, everyone there is just wonderful. All the employees, and that's emotional, right? It's like, it reminds me, I had a dry cleaner that packed in all their dry cleaning, and they did a really terrible job. But when you went in there, they treated you like gold, man. You came in there and, they just loved you. And you're like, all right, you're treating me good. I'll put up with the bad product and the bad service. Right. Ernie, what would you leave your audience with?
I would say this. If you look at NCREF, and they take a look at every sector in commercial real estate, whether it's multifamily, retail, office, industrial, senior housing has outpaced every other sector for the past 10 years, and will continue to do that. Yeah. The key here is something that is almost recession-proof, and the reason for it is that there's a need. We talked about earlier that there's a ramped-up demand coming up because of the aging baby boomers. That will continue for the next 20, 30 years, and there's a need. So if you can meet the need, then you'll definitely also be profitable.
Yeah. Well, and I agree that that recession-resistant factor of senior housing might make it a good opportunity to have in your portfolio in some way.
Well, I can tell you, Tim opened up a new community I think it opened up March of 2008.
Yeah, 08.
And to talk about a bad time in the market, we've all experienced that.
Right.
Tim, you want to talk a little bit about?
Yeah, we were full by December of 08.
Wow.
Yeah. And I was the jerk walking around saying, what's wrong?
Yeah, well, that's great. Well, and a great service. I know senior housing is a lot more involved in every type of way when you look at real estate. It's even more involved in kind of hospitality and hotel, because the type of clientele you take care of. So thank you for what you guys do, and thanks for being on the show.
Thanks a lot.
Thank you, Michael. Thank you.
All right, and thank you for joining us out there. Tell us what you think. We appreciate you sharing the show, and we invite you to reach out to us. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com. Red IQ. Turning multifamily data into actionable intelligence. Visit rediq.com.